Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Bitcoin. Not to take a look at the most recent price action, but to kind of give you my thoughts and opinions on where things could be heading in the next bullish cycle to the upside. We here have pretty much a weekly chart showing a lot of data for Bitcoin going all the way back through to 2012. So we're going to be taking a look at the history. We're going to be taking a look at where we are right now, what this means, and where things could potentially be progressing to in the future. I also tried to put to bed a lot of myths and a lot of things that just simply are not actually correct, and we're going to try to put those to bed as well. And then we'll focus in on what is the most probable outcome from this. Now, we will be applying Elliott Wave theory. If you are not familiar with Elliott Wave theory, then do check out 𝗕𝗘𝗪𝗏𝗂𝗏, linked in the description below. You'll be able to take part in a 21-part video course where we explain all the different kind of ins and the outs and the rules behind Elliott Wave theory. Now, Elliott Wave theory, guys, it is basically tracking people's behavior. It's the psychology of the people buying and selling, and that is incredibly important when it comes to cryptocurrency assets, as a lot of it is emotional reactions to price movements. Okay, so Elliott Wave theory, if done correctly, can be incredibly powerful, so well worth knowing it if you do not already. So some of this may be alien to you. I'm going to try to go through this the best I can, giving you all the facts on the information and all that wonderful stuff. Now, if you find it useful, informative, smash the like button here. Do appreciate that. If you're new to the channel, why not subscribe? Stay up to date with all the videos that we do. And if you haven't joined us in Discord, you guys, you are missing a trick. Join us. Link in the description down below. It's a fantastic community talking crypto 24/7. Above and beyond that, though, it is the first place that we go to notify you of the ins and the outs of everything that is happening in this space. If you want to stay ahead of the curve when it comes to exchanges going down like FTX, then Discord is the place to be. Okay. Let's get a wiggle on and get into this, right? So Bitcoin paired up with USD on the 1 week chart, and Bitstamp is our data source. Now, I'm using this as our data source and our pair because it has a lot of data to it, and we can kind of put to bed some of the things that have been going out and about in terms of BTC. So let's go ahead and dive down into this. Okay, so straight off the bat, the first thing that I see from time to time are people who say, look, we've done 5 waves, we're going down into a super low point, right? And they go 1, 2, 3, 4, 5, look, we're done, right? This is not the correct use of Elliott Wave theory. This is an incorrect count. Yes, there are 5 waves if you were to draw it like this. However, it is not correct. 5-wave structures like this have a lot of rules associated with them. Okay, wave 3 particularly should be at least 1.618 times that of wave 1, which in this particular case, using the fib tools, we can see should be $3.5 million. I'll just show this on here so we can kind of put it to bed. If I put this to the low point just over here, 1.618 is actually it's higher than that. It's $3.8 million. Okay, so the price for that wave 3 would have had to have been up here in order for this to have been a valid wave count. Okay, so it's not 5 waves like this. So we can kind of put that one to bed. That's not what is going on. It is not a 5-wave count. Instead, you have to kind of dissect the moves going on in here. Now, as I said previously a couple of times, it's possible that actually what we've got going on here is a big ABC structure. So, supporting the narrative of the bears, of course, with the moves to the downside, you can kind of see we came close to this $75,000, which would have been a 1-to-1 ratio. Okay, so if we come in here, we would have had this A wave coming up into the highs of 2013, briefly coming down here and then rallying on up into that C wave high. Okay, and essentially complete, right? So we kind of finish a 3-wave structure. Alternatively, of course, you can look at it coming down here and getting rejected from the 786, and I think that's a much better fit overall. So I'd actually have it mapped like this myself. Now things get interesting though, and that is when we start reflecting on what happened here in 2017 and 18 as we kind of come down into that bear market of 2018, right? It's a 3-wave structural drop in the same way that we saw over here with this one, right? We have these kind of corrective structures. So essentially we kind of have this kind of move to the upside. There's lots of kind of movements in the inside here. We can kind of look at that as a zigzag pattern. Okay, so if I, for example, do map that in, you have 1, 2, kind of 3, 4, and 5. You have it there, and then you come over here, and we can also go and say 1, 2, It doesn't really generally matter where we put this because there's a lot of nested movements, but I do think it's this one right here, and we complete it like that. Okay, so we end up with that kind of zigzag and an ABC structure, right? Now, why do I say that? And why is that important? Well, I think it's important because of what's going on just over here, because I do think this actually, on reflection, is a 5-wave structure, okay, like that. And the 5th wave just falls short. And a lot of that you could argue is manipulation. Now, falls short of the 1.236 level. So typically what you would expect to see when it comes to Elliott wave theory is this area just here, which was $78,000, but we fell short of that minimum expectation. But the reason that I do think this is a 5-wave structure, or 5th wave structure here, is that when we actually break this down, we have 1, 2, 3, 4, 5 structure inside of it. So I think we're okay to kind of call that. Now, why do I think that that's an important milestone here for BTC? I think this is an incredibly important milestone because if this is a zigzag, as I suspect it is, on this side, and we have this kind of really small, brief corrective structure, and then go 5 waves up again, you can't just have 5 waves on their own. So when it comes to Elliott wave theory, if you start a move with 5 waves, you must end that move in 5 waves, okay? That would then actually be a zigzag pattern as A, B, and C goes, right? So when we see that 5-wave pattern here, and we have that final 5 wave in there, and we have 5 waves here and 5 waves there, it's a 5, 3, 5, 3, 5, and we are in this corrective stance down, coming down, which I believe to be AWXYXZ. Essentially, this then leads us up into a potential 5-wave structure to finish off a macro level, and a true macro, because what happens after this could be pretty interesting, because you could look at this as a giant A, B, and then up here into a C move, and then completely get done with all of this, and then break down significantly. Again, not a guarantee, of course, but we should be aware there's going to be diminishing gains. We've seen this time and time again. Now, in the sense of where we are in this bear market, right? So far, what have we done? Well, we've kind of mapped out everything from 2012 through to 2013 highs, 2017 high, the 2021 high is mapped out here. But I still think we're in a bigger structure for our Bitcoin on our final kind of move upwards. Okay, so wherever we end up going down, whether we do go down to 10k, 7k, whatever, it does tell us that we are going to be moving up potentially much higher than 100k. It really depends on how low we go. So for example, if we go down to $5,000, right, we are talking about $110,000, $112,000 BTC in that next cycle to the upside. If we go down to about 7.5, we're talking about $167,000. If we go up to or down to 10k, sorry, just here about like 9.8, then we're talking just over 200k in appreciation. Now, in that being said, right, depending on how low this big bear market does go, we don't really have a true kind of like target zone just yet. I know that 13,000 is a key level. We can see that. I don't know if that's going to be at the bottom though, because we are not seeing any kind of buying activity yet. So we'll keep an eye on that. It could be down at around the 10k, lose 10k, and I do think that that is going to be a problem area, because that essentially is going to be where retail will sell. And I think that's really what we're waiting for. We are waiting for retailers to sell their Bitcoin to the whale investors, because they've been coming out heavily. So let's assume that we come down to 10k. I think that's a reasonable expectation at this point, personally. Now, if I measure this entire 5-wave structure here using the Fibonacci retracement tool, and we move it over to our lows of around the, I think I'm going to go with 9,800, right? Yeah, so essentially, if we were to assume a $9,800 level, then we will be looking at approximately the $200,000 or $212,000 BTC target right up here. Now, that would be under a 5-wave structure again, because you have to end in 5 waves. So I would be expecting 5 waves to go up here. Okay, and one of the things that we have seen that I think is super important is we've seen a huge shrinkage of supply on the exchanges. We're at multi-year lows, right? And those multi-year lows are critically important in thinking that essentially there's a shrinkage of supply when price moves, or the most important metrics to price movement are supply and demand, we should consider that the shrinkage of supply is going to have a profound effect on the future price of BTC. We've also seen after FTX a lot of people looking for self-custody, which I think is incredibly wise. But these are people, and retail investors specifically, who haven't done this before, and therefore few of them are probably going to make mistakes. They're probably going to lose access to the cryptocurrency. So we should be aware that there's potentially even going to be lost Bitcoin on the increase as well. So not only are miners, significantly getting a reduction in the amount that they can earn from the halving events and things like that, we're also seeing a shrinkage of supply on the exchanges for available purchasing from new investors. We have new, maybe existing investors that are first-time self-custodying cryptocurrency potentially going to lose access to those cryptocurrencies. Scammers are going to gain access and things like that. There's going to be pockets of stuff going on that I think we are going to see a significant surge to the upside when it comes to BTC. So on the highest possible point, I think 200k, and I do think actually, if we're realistic, this yellow box here between 65 and 110 is a pretty reasonable expectation. I don't think that's an unusual amount. So assuming that we do go down into these lows of around that $9,800 level, we'll be looking at maybe 500 to 1,000 on the comfortable level percentage points, or 2,000 to match up with what happened in 2021. We are not talking about much in the way of gains here. Not for Bitcoin holders, definitely not in comparison to altcoins or anything like that. But if you're, got a significant amount of wealth locked up in Bitcoin and you're looking for a long-term hold, then yeah, I do think we're going to see some appreciation in the next cycle move to the upside. But this is where the problems then start to unfold. This would be a kind of an interesting kind of pattern here. So we had the zigzag this side and a zigzag this side. So that's a double zigzag, right? Coming in here, A, B, and C. Now, that's not too unusual. You can have a double zigzag, but generally speaking, you can never have more than 3 zigzags in a row. So there's definitely going to be a limited upside here. And triple zigzags are reasonably rare. You wouldn't expect those specifically on a macro level. So what happens after 200k is going to be incredibly interesting, or 100k, whatever it is, will be incredibly interesting. Are we going to see that mega bear market at some point in the future for Bitcoin? Or not? And I know people are calling it now. I just can't see how we can call it now when we haven't got a structure to support that. So keeping that in mind. But yeah, for now, I do think that's where we're going with BTC. I think we'll finish off this bear market somewhere lower than 10k, and then move on up into another 5-wave structure, which would complete a zigzag pattern. So personally, target out around the kind of 65 to 110k, and if we're getting good structure and we can see good structure, then we might have a shot at that 200k area there as well. Guys, I'm going to leave this video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe. And if you're looking to learn Elliott Wave theory, check it out. 𝗕𝗘𝗪𝗔𝗥𝗠𝗘𝗥𝗦, linked in the description down below. Guys, until the next one, have a fantastic day.